Welcome back to the Wealthy Roots podcast, and welcome to another deep dive. Today, our mission is really to cut through some of the noise. We want to analyze two, intersecting pieces of the Canadian housing puzzle, foundational pieces, really.
Yeah, it's sort of regulatory intent versus market reality, isn't it?
Exactly. So on one side, we're dissecting this major proposed policy change. It's aimed squarely at first-time buyers looking at new builds.
Right, the big one. The first-time home buyer GST/HST rebate could be worth up to, what, $50,000?
That's the number. And then right alongside that, we're putting it against the hard market predictions from CREA, the Canadian Real Estate Association.
Specifically, their latest forecasts for 2025 and looking further out to 2026.
This is, I think, absolutely essential info for anyone trying to navigate to the market right now, or maybe planning to jump in soon.
Or even just trying to get a handle on the bigger picture, the macro dynamics shaping supply, you know?
Oh.
What we've got here is a policy designed, really engineered to boost new housing supply, something we desperately need. And the timing. Well, it looks like it's set to cross paths, with forecasts showing a pretty major market rebound, like a potentially historical sales volume jump expected in 2026.
So understanding how this big government incentive might interact with all that pent-up demand, that's the core of it today.
That's our focus.
Okay, let's unpack this then. We need to get really specific.
Yep.
On the policy side, the mechanics, how does this proposed rebate actually work? How is it different from the old one?
Great. And the $50,000 max benefit, how's that calculated?
And critically, that new price cap, extending eligibility all the way up to $1.5 million. How does that change the game, especially in expensive cities?
Huge difference there.
Then we pivot. We look at the data, CREA's latest numbers, sales prices. What are they seeing for 2025? And then that predicted surge in 2026.
Yeah, it looks like they see a bit of a stabilization, maybe a slight dip this year before things really take off again. Like the market was just delayed, not totally derailed.
Government policy aiming for growth, meeting market forecasts that suggest, maybe things just got pushed back a bit. Let's dive in. Okay, let's start where the government's trying to step in. The first-time homebuyer GST/HST rebate. Now, this is based on proposed legislation, Bill C-4 specifically.
And right off the top, we have to emphasize this because it's the absolute key operational detail right now.
It's not law yet.
Exactly. It's proposed. Applications are not being accepted. You can't get this money today.
That not yet available thing.
Yeah.
You really can't overstate it, can you? It introduces some real risk for buyers. We'll get into that.
Definitely. But first, let's look at the goal. What's Bill C-4 trying to achieve? Basically, it aims to wipe out, or at least significantly cut, the federal part of the sales tax.
The GST or the federal bit of the HST.
Right. That first-time buyers pay when they buy a brand new home or one that's been substantially renovated.
So it's a targeted effort. Make new construction cheaper, more appealing, get people buying in those new units, encourage new supply. Now, to really get how big a change this is, we probably need to look back at the old system. I mean, people might know about the existing GST/HST new housing rebate, but what were its limits? How is this FTHB rebate really different?
That's the crucial starting point. The existing rebate, the one we have now, it's always been capped, pretty tightly too. For a buyer to get the maximum federal rebate, the home's value couldn't be more than $350,000.
Okay, $350K max value for the full rebate.
And even more importantly, that rebate started phasing out above $350K, and it disappeared completely once the price hit $450,000.
So wait, if you were buying, say, a new condo in Vancouver or Toronto for $700,000, which isn't unusual.
Not at all.
You got basically nothing back from the federal government on the GST/HST.
Exactly. Nothing on the federal portion. In those big, expensive urban markets, that $450,000 cutoff just made the federal rebate totally irrelevant for most new builds.
The builder charged the full tax, and that was it for the federal part.
That was it. So this new FTHB rebate in Bill C-4, it completely changes that. It creates a brand new, much larger rebate just for first-time buyers, and crucially pushes that eligibility limit way up, all the way to $1.5 million.
Okay, let's define the core mechanism then. What kind of purchase qualifies for this new FTHB rebate?
Well, it's pretty tightly focused on new supply and how you'll use it. The purchase has to be a newly built home or one that's been substantially renovated.
Okay, new or substantially renovated.
And this is absolute. It must be bought for use as the buyer's primary place of residence, your main home.
Not an investment property.
No. If you meet those conditions, You could get back up to 100% of the GST, or that federal part of the HST that you paid, but it's capped.
All right, capped at that $50,000 figure.
Maximum $50,000.
Now, you mentioned earlier this is a top-up. We need to be really clear here. Does that mean a buyer who qualifies for this new FTHB rebate could potentially get both the old new housing rebate and this new one?
That's exactly right, under certain conditions. This new FTHB rebate is specifically designed to act as a supplement, a top-up to the existing structure. So if your new home happens to be priced below that old $450,000 threshold, you could potentially claim both rebates, assuming you meet all the other criteria: first-time buyer status, primary residence, etc.
Wow, so the total tax relief could actually be pretty significant for someone buying a less expensive new home.
It could be quite substantial, yes. Best of both worlds, potentially. Hashtag 1.1, the $1 million to $1.5 million eligibility tiers.
Okay, here's where it gets really, really interesting, especially when you think about those CREA price forecasts for 2026 maybe pushing $700K nationally. The people writing this policy clearly realized just raising the cap a bit wasn't going to cut it for places like the GTA or Vancouver.
No, definitely not. They built in this scaled structure. It's quite flexible, acknowledging that prices can easily hit, up to $1.5 million.
That flexibility up to $1.5 million, that really feels like the game changer. It accepts that a first-time buyer in a big city might need $1 million just for a standard, say, two-bedroom new condo.
It does. The structure seems designed to give the maximum kick below $1 million, and then it sort of gently phases out after that.
So let's walk through those tiers. First, if the new home's value is up to $1 million, what happens then?
Up to $1 million, you get the maximum potential rebate. That's up to 100% of the federal GST-HST paid, right up to that $50,000 ceiling.
Okay, straightforward enough. Full power up to $1 million. But then you cross that line.
Right. Once the home value is between $1 million and $1.5 million, that maximum $50,000 rebate starts to decrease. It gets reduced gradually.
Gradually.
How does that work?
It's linear. And the source is explicit. If the home hits $1.5 million or goes above it, there is no rebate at all. Zero. It just vanishes. Okay, linear phase out. Let's maybe run through an example or two just to make that calculation crystal clear, because buyers will need to know this precisely. The source mentions a $1.25 million home. That's exactly halfway between $1M and $5M.
Right, the midpoint.
And it says they'd get 50% of the max rebate, so $25,000. Makes sense. What about a home just over the threshold, say $1.1 million? How much do they lose?
Okay, good example. So you look at how far past the $1 million starting point you are. A $1.1 million home is $100,000 past $1 million.
Right.
Now, the whole phase-out window is $500,000 wide, right? A water 5M minus $1. So you see what percentage $100,000 is of $500,000.
That's a good 20%.
Exactly. So you've gone 20% in the phase-out window, which means you lose 20% of the maximum rebate.
Lose 20% of the $50K, that's $10,000 lost.
Right. So the eligible rebate for that $1.1 million home would be $40,000. $50K minus $10K. Still a very healthy incentive, even just over the million mark.
Okay, that's clear. Now let's go closer to the top end. What if the new home is, say, $1.4 million?
Okay, $1.4 million. That's $400,000 past the $1 million floor. So $400,000 divided by the $500,000 window. That's 80%.
So they've lost 80% of the potential rebate.
They have. 80% of $50,000 is $40,000 gone. So their maximum eligible rebate is only $10,000. See how it drops off really sharply as you get closer to that $1.5 million cliff?
Wow, yeah. That calculation is absolutely vital. Buyers shopping anywhere in that $1 million to $1.5 million range, especially in Toronto or Vancouver, they need to be super precise.
Yeah.
Because, like you said, $1.4 million gets you $10K back, $1.5 million gets you nothing. Big difference.
Huge difference from a small price change at that level. Hashtag tagged 1.2 strict eligibility criteria and timeline, the fine print.
Okay, let's move into the fine print now. The source material really stresses this. To be considered a first-time home buyer for this specific rebate, you have to meet all the conditions laid out.
All of them, yeah. And it's not just about buying a standard condo from a developer. The policy seems designed to cover a pretty wide range of new construction scenarios.
Right, reflecting how housing actually gets built and owned in Canada. So what scenarios are covered beyond just being a first-time buyer?
Well, the main one is buying a newly built or substantially renovated home directly from a builder. And that includes some less common types like homes on leased land, mobile homes, even floating homes.
Interesting. What else?
You could also be eligible if you purchase shares in a cooperative housing corporation, a co-op, but specifically for a newly built unit within that co-op.
Okay.
And the third main path is if you build or substantially renovate a home yourself, what we often call owner-built.
So they're trying to capture pretty much any way new housing stock comes online. Makes sense if the goal is supply.
Seems to be the intent.
Now let's talk deadlines. Bill C-4 has some very specific dates attached. It creates a kind of window of opportunity, doesn't it? What are the timelines if you're purchasing a home from a builder?
Yeah, the timelines are critical, and they suggest this is meant to be a temporary boost, but with a long view. First, the purchase and sale contract has to be signed on or after May 27, 2025.
Okay, May 27th, 2025 is the start date for eligible deals.
And it has to be signed before 2031, so that's the window for making the deal.
Got it. May 2025 to end of 2030, basically.
Right. Then there's the physical completion and transfer window. The actual construction work has to begin before 2031, and the home needs to be substantially completed before 2036.
And ownership transferred before 2036, too.
Yes, ownership transfer also before 2036.
And there are rules about occupancy and prior claims.
Absolutely. The buyer has to be the first person to live in that home as their primary residence. And crucially, neither the buyer nor their spouse or common law partner can have ever received this specific FTHB GSTHT rebate before. It's a one-time shot per couple for this particular program.
Okay. That May 27, 2025 date is interesting. It means the policy, even though it's just proposed now, is intended to apply retroactively to deals made quite a while after it's first announced.
It seems so, yes.
What about the owner-built homes? There's no builder agreement date there, so how do they define the trigger? Is it just about when the work starts?
Pretty much. For owner-built, the timelines mirror the purchase rules but focus on when the actual construction or substantial renovation begins. That work has to start on or after May 27, 2025 and before 2031.
And substantial completion before 2036. Same as purchased homes.
Same completion deadline, before 2036. And the fair market value rules, including that $1.5 million ceiling, would apply to the completed home's value.
The source has a really good example clarifying what construction begins actually means. Can you walk us through that? It involves someone planning ahead.
Yeah, it's a great clarification. So imagine a buyer. They're organized. They buy the land back in 2024. They get their building permits sorted out in, say, early 2025, all before the key date.
Right. All the prep work is done before May 27, 2025.
But they don't actually break ground yet. The physical excavation work for the foundation, that doesn't start until June 1st, 2025.
So even though the land purchase and permits were earlier, the first actual physical construction work happened after May 27th.
Exactly. And according to the source, the CRA would consider the construction to have begun when that excavation started. Since June 1st, 2025 is after May 27, 2025, that construction is considered eligible under the policy.
That's huge for people planning builds. It's not about the paperwork date. It's about when the shovel actually hits the dirt for the house itself.
Physical work is the trigger. That's the key takeaway. Hashtag tag 1.3 application logistics and risk.
Okay, this brings us right back to the present-day reality. And honestly, probably the biggest headache for first-time buyers looking at new builds right now, the application process, or rather, the lack of one.
And the risk that comes with it, yeah. Because, again, Bill C-4 is still just proposed legislation. The Canada Revenue Agency, the CRA, they are absolutely unequivocally not processing claims for this FTHB rebate yet.
This seems like a major operational hurdle. It creates a kind of temporary cash flow shock for buyers who might otherwise qualify, doesn't it?
It absolutely does. Think about it. If you buy a new home from a builder and your closing date happens before this bill gets royal assent and becomes actual law, well, you're basically fronting the cost of that tax relief yourself.
Wait, so if I'm a first-time buyer and I close in, say, late 2025 on a $1.25 million condo, I know I should get $25,000 back eventually under this policy, but I have to pay it up front.
You have to pay the full GST or HST to the builder at closing, yes.
Wow. So I might need an extra $25,000 or more in cash or financing just to close? Money I'm expecting to get back sometime later.
That's the current reality. You absolutely must budget for that full tax amount up front. It's critical for your financial planning, your mortgage qualification, everything.
And the builder can't just give you a credit for it, even if they know the policy is likely coming.
No. The source is clear. Builders are not permitted to credit the FTHB rebate amount before royal assent. They can only credit the existing, much smaller GSTHT new housing rebate, if applicable below $450K, and any relevant provincial rebates.
That is a significant burden. especially for a first-time buyer who's probably already stretched thin with the down payment, closing costs, stress tests.
It really is. You're essentially financing a tax bill temporarily. You expect to get it back, but maybe not for months, maybe longer, depending on how long the legislative and administrative process takes.
So what's the process for the buyer then? They pay the full tax, close the deal. Then what?
Then the responsibility shifts entirely to them. The buyer has to apply for the FTHB rebate directly to the CRA, but only after Bill C-4 actually receives royal assent.
So it becomes this whole separate administrative task for the homeowner after they've already moved in, not just a simple credit at closing.
Exactly. It's not a point-of-sale relief in this pre-assent period. It's a post-closing application process.
And presumably the forms needed for this,
Yeah.
they don't even exist yet.
That's another complication. The existing forms, like the GST 190 for homes bought from builders, or the GST 191 for owner-built homes, and the guide that explains them, RC 40028, they all need to be updated.
Updated to include the calculation for this new FTHB rebate, the new price tiers, all of that.
Right. And those updated forms are still pending, so there's an administrative lag on top of the legislative lag.
It just adds layers of complexity and, frankly, risk. The potential benefit is huge. $50K is massive. But getting it requires real planning, real awareness that the money isn't guaranteed until the law passes, and even then, it might not show up until well after you've had to pay the tax bill.
It definitely requires careful financial planning and maybe even looking at bridge financing options for some buyers to cover that temporary tax hit. It's a hurdle.
Okay, so we've thoroughly dissected the rules, the government's attempt to pull people into the new build market with this pretty powerful financial lever. But the huge question is, what's the market actually doing?
Right. Policy is one thing, reality on the ground is another.
So let's turn to the hard data. We've got the Canadian Real Estate Association's CREA's updated forecasts. These came out October 16th. What's the context here? What were they expecting before this update?
Well, the context is interesting. If you go back to late last year, CREA was actually predicting a pretty strong recovery for 2025. The thinking was, interest rates would start coming down sooner, faster, and that would unleash a lot of pent-up demand that had been sitting on the sidelines.
So they expected sales to bounce back significantly this year.
Yeah, they thought sales would probably break that 500,000 unit mark again quite easily in 2025, and that prices would stabilize, maybe start climbing back towards that $700,000 national average fairly quickly.
That's not quite how the first half of 2025 played out, was it?
Right.
What did CREA say kind of dampened things?
No, the reality was different. CREA points to things like, and I'm quoting loosely here, tariff chaos and generalized economic uncertainty, really slowing things down early in the year.
Okay, broader economic jitters.
Right, and that seemed to hit hardest in the biggest, most expensive markets, BC and Ontario specifically. Buyers there, already dealing with high prices and higher borrowing costs, just seemed to pull back again, wait-and-see mode.
But the source also mentions that sales activity has been climbing steadily since March 2025. So it wasn't like demand just vanished.
Exactly. That's the key takeaway from CREA now. It feels like the demand was just postponed, not destroyed. The robust recovery they initially penciled in for 2025, well, now that's basically what they're expecting to see happen in 2026 instead.
So the forecast got pushed out by about a year. A temporary dip or stabilization first, then the surge.
That seems to be the revised outlook. Delay, not derailment. Hashtag TagTalk 2.1, the revised 2025 outlook. A temporary dip.
Okay, let's dig into the revised numbers for 2025 then, reflecting that early year's sluggishness. What's the national picture for sales activity look like for this full year?
Nationally, for 2025, CREA is now forecasting a small dip in sales compared to 2024, down 1.1%.
Okay, a slight decline. What does that translate to in terms of actual transactions?
That works out to about 473,093 homes expected to trade hands nationally through Canadian MLS systems this year.
Under 500,000. And what about prices? If sales are slightly down, what are prices doing nationally in 2025?
Also forecast to dip slightly on an annual basis, they predict the national average home price will decline by 1.4% in 2025.
Okay, 1.4% down. What does that put the average price at?
That brings the forecast national average down to $676,705 for 2025.
Okay, sub 700 pay nationally. That might sound like welcome news for buyers, but you flagged earlier that the national average can be misleading. The source stresses regional differences here, right?
Hugely important. That slight decline in the national average price, CREA says it's basically attributed entirely to expected dips, specifically in British Columbia and Ontario.
Just those two provinces are pulling the whole national average down.
Pretty much. Because they represent such a huge chunk of the total sales volume, and they have the highest average prices, when activity slows or prices soften there, it just mathematically drags down the overall Canadian average.
So if BC and Ontario are seeing stabilization or maybe small corrections, what's happening elsewhere? Like the prairies, Atlantic Canada,
Yeah.
places where maybe that FTHB rebate could have a bigger affordability impact.
Yeah, the picture looks quite different once you look outside BC and Ontario. In most other provinces, CREA is actually forecasting price gains for 2025,
Gains. How much?
ranging typically from about 4% to 8% growth this year in many other regions.
Wow. So markets driven more by local economics and relative affordability, like in Alberta, Saskatchewan, parts of Atlantic Canada, they're still seeing steady upward pressure on prices, even while the biggest players cool off a bit.
That seems to be the dynamic for 2025, a real divergence. Hashtag 2.2, the solid rebound expected in 2026.
Okay, now let's look ahead. 2026. This is where CREA seems to think the market momentum really kicks back in, fulfilling those earlier expectations. This is the year that FTHB policy incentive might really collide with returning demand.
Yeah, the 2026 numbers are, well, they're pretty striking. Sales activity is forecast to rebound very significantly. They're predicting a jump of 7.7% in sales volume for 2026.
7.7% increase in the number of sales. Wow. What does that mean in terms of total units?
That pushes the total forecast transactions up to 509,479 units for 2026. Over 500,000 homes trading hands again.
Okay, back over the 500,000 mark. That's a really big jump from the 2025 forecast. Can you put that number, 509,000 sales, into some historical perspective? Is that a lot for Canada?
It is historically high, yes. CREA specifically points out that 509,479 units would be the highest level of activity we've seen since the frenzy of 2021, which was kind of an outlier year itself.
Right.
And looking back further, they note that national home sales have actually only broken that 500,000 mark 7 times in our history since they started tracking nationally. The first time was way back in 2007.
So if this forecast pans out, 2026 would only be the 8th time ever that Canadian housing saw this much sales volume. That signals a huge amount of liquidity, a lot of people making moves.
It really does, a very active market predicted.
And presumably that kind of activity puts upward pressure on prices again. What's the price forecast for 2026?
Yes, prices are expected to rise again. The national average home price is forecast to increase by 3.2% from the 2025 level.
Okay, 3.2% increase. Where does that put the national average?
That brings the forecast average price for 2026 up to $698,622.
Right back up near that $700,000 mark again. Feels like we keep bumping up against that number.
It really seems to be the new baseline, doesn't it? The source notes that 2026 would actually be the 6th year in a row where the national average price has basically hovered right around $700,000.
Wow. 6th straight year. It really suggests a structural shift higher in baseline prices over the last, half decade or so?
It certainly looks that way from the data.
Of course, CREA being CREA, they always include a disclaimer, right? Forecasts are tricky these days.
Always. They explicitly state that these forecasts are still subject to, higher than normal levels of uncertainty. Things could still change.
But maybe slightly less uncertain than earlier this year.
They do suggest that, perhaps. That maybe the extreme uncertainty of early 2025 has eased a bit. But yeah, external shocks, economic shifts, they could still definitely alter these expected dynamics. It's a forecast, not a guarantee.
Okay, this is where we try to connect the dots. We've got this potentially very powerful, high-value government incentive. It's aimed specifically at new construction and significantly at homes priced up to $1.5 million.
Right. A lever designed to pull first-time buyers into new supply.
And we've got a market forecast that sees prices kind of stabilizing, maybe even dipping slightly in some key areas in 2025, potentially offering an entry point.
A brief window, perhaps?
Immediately before a massive, nearly 8% jump in sales volume is expected in 2026. It really feels like these two forces are set to collide.
The timing is fascinating, isn't it? You have this proposed incentive potentially coming online just as pent-up demand looks ready to flood back into the market.
So how might they interact? The FTHB rebate targets new supply, which everyone agrees we need. And by pushing eligibility up to $1.5 million, it becomes relevant in those expensive markets, BC and Ontario.
Exactly. The very markets that are forecast to see the biggest price stabilization or slight declines in 2025. So theoretically, that temporary price dip, combined with a potential $50,000 tax break, it could make newly built homes slightly more reachable for some first-timers in those regions.
Assuming they can navigate the application process and the upfront tax payment we talked about?
Assuming all of that, yes, the complexity is still there, but the financial incentive is powerful.
So if the policy gets royal assent relatively soon, say early 2026, it lands right as market confidence is returning and sales volume is forecast to surge. It seems perfectly timed to amplify that rebound, doesn't it?
It does seem positioned to add fuel to that fire. Which leads to the devil's advocate question.
Uh-oh. Okay, let's hear it.
Well, if you inject potentially tens of thousands of dollars of essentially government-backed purchasing power directly into the new build segment, the very segment we need to expand to solve the supply crisis, just as overall demand is surging.
Does it risk just driving up the prices of those specific new units?
That's the risk, isn't it? Especially in that $1 million to $1.5 million range, where the incentive is active. We know demand is coming back strong in 2026, based on CREA's forecast. The government is adding purchasing power specifically for new builds in that price range.
So, the policy is meant to make it cheaper for the buyer. But could it just end up allowing builders to charge more because they know buyers have this extra $50K cushion?
It's a classic economic dilemma. In theory, supply should respond, more demand should lead to more building, but construction takes time. If that 7.7% jump in sales volume materializes quickly in 2026, suggesting huge pent-up demand is unleashed all at once.
Then the $50K incentive hits a market where supply is still catching up.
Exactly. It could absolutely accelerate competition for the existing pool of newly built homes under $1.5 million. Builders, seeing that increased demand and the available subsidy, might be tempted to capture some, or maybe even all, of that $50,000 benefit by just raising their asking prices.
Especially those really hot subsegments, maybe the $800K to $1.2 million new townhouses or condos.
Precisely. So the subsidy intended for the buyer potentially gets transferred, at least partially, to the builder's bottom line through higher prices.
That's a really important dynamic to watch if this policy goes live alongside that market surge. It might not deliver the full intended affordability benefit if supply doesn't keep pace immediately.
It's a very real risk. The effectiveness hinges on how quickly new supply can actually respond to both the market demand and the policy incentive.
Okay, let's translate this into practical advice. For the learner, our listener, who might be a first-time buyer eyeing new construction right now or in the near future, what should they be doing knowing this policy is proposed but not yet law and the market is shifting?
I think their plan needs two main parts. First, meticulous awareness. They have to track the status of Bill C-4 relentlessly. Know if and when it gets royal assent. Because remember, the purchase agreement has to be dated May 27, 2025 or later, so they might already be negotiating in an eligible time frame.
Okay, track the law. What's the second part?
The finances. This is critical. They absolutely must budget to pay the full GST or HST up front if they end up closing on their new home before royal assent is granted.
Plan for that potential cash flow shock. Assume you won't get the rebate credited at closing.
Assume it. That means having potentially tens of thousands of extra dollars ready, whether from savings, gifts, or maybe even arranging temporary financing just to cover that tax liability at closing. And be prepared for the paperwork hassle of claiming it back from the CRA later, using forms that aren't even finalized yet.
It adds a significant layer of planning and patience, doesn't it?
It really does. The incentive is powerful, but accessing it, especially in this interim period, requires serious diligence.
We see CREA forecasting that huge 7.7% rebound in sales volume for 2026. If a significant number of first-time buyers were genuinely sitting on the sidelines waiting for clarity on big incentives like this, how much of that acceleration do you think could be directly attributed to Bill C-4 finally kicking in?
It's impossible to put an exact number on it, of course. But the timing is, as we said, impeccable. Or maybe perfectly coincidental, depending on your view.
Yeah.
But you have a massive potential incentive landing right when overall market liquidity is forecast to spike. It seems almost perfectly positioned to convert potentially thousands of hesitant first-time buyers into active participants.
So the broad market acceleration that CREA sees coming anyway gets an extra boost from this targeted government lever.
I think that's highly likely. It ensures that competition for new construction, especially anything priced under $1.5 million, is probably going to be very intense through 2026. For builders who time their projects right, starting construction after May 2025, they're likely looking at guaranteed demand when the market fully heats up.
It's a fascinating dynamic. Government trying to fix a macro problem supply with a micro incentive, a tax break, right as the market seems poised to provide the demand surge needed to really test the whole theory.
Exactly. 2026 could be a major case study in policy meeting market forces. Hashtag tag outro web.
Okay, let's quickly pull together the essential numbers and timelines you really need to keep in your head from this deep dive.
Yeah.
Policy side first.
Right. Proposed FTHB GSTH-ST rebate. Maximum potential benefit. $50,000.
That full $50 K applies to new homes valued up to $1 million.
Then it phases out linearly between $1 million and $1.5 million.
And disappears completely at $1.5 million or above. Zero rebate then.
And crucially, this applies only to purchase agreements signed on or after May 27, 2025, with construction having to start before 2031 and finish before 2036.
And the big caveat, it all hinges on Bill C-4 actually passing. If you close before it gets royal assent, you pay the tax up front and claim it back from the CRA later. Big administrative step.
Huge one. Plan for that cash flow.
Okay, market side. CREA's latest forecast for 2025, a bit of a breather. National sales down slightly, 1.1%. National average price also down slightly, 1.4%, settling around 676,705%.
But that national dip is really just BC and Ontario stabilizing. Most other provinces see price gains in 2025, 4% to 8%.
Then 2026 hits. That's the predicted rebound year. National sales volume forecast to jump a massive 7.7%, reaching over 500,000 units, 509,479.
Pushing the national average price back up by 3.2%, landing right near that $700 Kale mark again, forecast at $698,622.
So a huge amount of market momentum seems to be building for 2026.
Definitely. And maybe here's a final thought, something for listeners to really mull over as these trends unfold.
Okay, lay it on us.
Well, the CREA data strongly suggests a big rebound in sales activity is pretty much baked in for 2026. The demand is there. The actual long-term success of this new FTHB rebate really hinges on whether it stimulates enough new construction fast enough.
Right. Does it actually create more supply or just make the existing supply more expensive?
Exactly. Given those deadlines, construction must start before 2031, finish before 2036. The real challenge for policymakers and the risk for the market is this. Will this policy actually encourage enough new projects to get shovels in the ground now to meet that demand surge CREA sees coming in 2026? Or will the incentive largely just bid up the price of the limited new supply already in the pipeline?
That gap between the intended supply boost and the seemingly inevitable demand surge. That's the core tension to watch.
That's the multi-billion-dollar question, really.
A perfect challenge to keep in mind as you track all these developments. If you are actively tracking this policy, definitely stay informed on Bill C-4's status through official government channels. And assuming it passes and applications eventually open, remember you can contact the GSTH-ST rulings line for very specific technical questions about your own situation. That number is 1-800-959-8287.
Good practical tip there.
This has been quite the deep dive into two really critical and clearly interlocked pieces of the Canadian housing puzzle. Policy meets market reality. Thanks for joining us.